Hi all, Namaste. I hope your preparations are going very fine. Uh, Today we have met here to discuss, to do a quick in-depth revision of this topic CA final audit committee and corporate governance. This video is going to be 100% in English, and the basic reason behind this is that it should reach every nook and corner of this nation, and I have tried my level best to explain the concepts in a very lucid manner. Okay, let's begin without any other TP. So guys, this is the chapter 11 of your CA final audit portion, and as the name suggests, audit committee and corporate governance. So there are two pillars for this topic. The first pillar is audit committee, right? So we are going to discuss about what is audit committee, the major chunk of this topic, and the second thing is corporate governance. In very short, if I want to tell you what is corporate governance, if tomorrow after becoming a chartered accountant you are going to manage your family, right? So how you are going to govern them? You are going to take them in a specific direction. For example, if you have some financial goals, you're going to take them to a next level of financial freedom, and whatever decisions you are going to take for your family, it will be in the bestest manner. Like I would say, it would be always in the benefit of all of them, right? So you will never take a decision which will be still give you money, like some illegal things, but it will create some chaos for them, right? So what is governance or corporate governance? It is like the management is there for the company, how the management should behave. Obviously profit is their basic motive, but then they should adopt means and ways, and the way they should operate the company should be in the best interest of the stakeholders. So that's how corporate governance is defined. Okay, so moving to our the topic, we will just jump into it now. The first thing is corporate governance is contained in firstly section 177 of the Companies Act 2013. Section 177 of the Companies Act 2013. This is where we are going to find audit committee as prescribed as per the Companies Act 2013. And next thing we are going to do is chapter 4, that is the SEBI LODR. Notice LODR, it is listing obligation and disclosure requirements. Okay, so Companies Act is going to get applicable to every company that is going to get incorporated. As far as SEBI LODR is concerned, it is only applicable to the companies which are listed on the stock exchange. Okay, so there's two steps. First is the primary stage. When a company is getting incorporated, Companies Act is going to play a role for it. But then when it is going to step up, when it is going to get listed, SEBI has to come up, right? All of you remember Harshad Mehta, the one who made SEBI powerful. Okay, so SEBI had nothing to do with the securities market as such, apart from guidance. It was the then Harshad Mehta who made it what's the integral part of India. Okay, so LODR also has two parts, right? We have discussed about I told you about the basics, that Companies Act and the LODR. So LODR also has two parts. First is the substantive provisions that is contained in the main body of the LODR, and the second one is the procedural requirements as per the SEBI LODR regulations, and it is in the form of schedules. We are going to study only the regulations. Our portion consists of only regulations. So yes, SEBI LODR applies only and only to what? Post listing of the company. Once it is listed on the recognized stock exchange, SEBI LODR regulation gets applicable, and yes, they are more stringent than the Companies Act. So how many issues or matters are covered by SEBI LODR regulation? So a very easy way to learn them, a very easy way to understand them is four points or four parts related to committees are covered, 4 parts related to management are covered, 4 parts related to papers are covered, and 1 part is other. This is our favorite. Even if we don't get anything, the one point that is constant everywhere is other, right? We can write this point that any other requirement, any other thing. So yeah, one is the other part. What are these 4 topics, or what are these 4 matters covered? If we talk about the 4 papers, right, related to paper, this is a trick, right? This bifurcation is not given anywhere. This is what I have bifurcated it. So what is related to paper? What is the paper? It's a document. So yeah, CEO CFO certification, It's a paper, right? That's why it is a LODR covers this part. Second is compliance certificate, again a certificate, it's a paper. Third thing, disclosure of management discussion and analysis. How you do analysis, how whatever you do, it's all on paper, right? So again the third part, that is disclosure of management discussion and analysis. And the last one is disclosures on important issues regarding related party transactions and accounting treatments. We are going to go into detail of each one of them and in a very rapid manner, but in depth, right? We are not going to skip anything just because this is a revision video. So this is related to papers. This is how you're going to tackle this. 4 related to management. What is management related? 4 issues that LODR is going to cover. First is the composition of the board of directors. Basic thing. Management is what? It is board of directors. So the first thing is composition. Second thing, obligation with respect to directors, independent directors and senior management. Obviously, if there's board, they have certain obligations. Third is the code of conduct and vigil mechanism. We are going to go into detail of this, but what is the code of conduct? Basically, this is the way a board should operate. This is the way a management should operate. If you don't have a code, if you don't have a conduct, if you don't have a decorum for a specific institution, anyone will do anything that they want to do, right? And the last one is management of subsidiaries. So yeah, this is also a part of the management point, the 4 management points. What are 4 committees? Risk Management Committee, Stakeholders Relationship Committee, Nomination and Remuneration Committee and Audit Committee. So LODR also deals with these 4 committees in detail, and this one other, that is information to shareholders. So we are going to get in detail of everything. Just quickly, let's go to section 177(1) of Companies Act 2013 Audit Committee. Now to whom this is applicable? Companies Act states the very first thing it is going to get applicable is to the listed public companies. See, listed public companies are going to get involved into every act of this Indian land. Like every act that is applicable in India, listed companies are going to get covered into it. So applicability of section 177(1), which talks about audit committee, it is applicable to listed companies. After that, it is applicable to all public companies. The word here is public companies, so no private companies, right? So audit committee is not applicable to private companies. Section 8 companies, no. Nothing else, only which? Public companies. Now there are 3 criteria. Given by section 177(1) for formation of audit committee. So if a public company, see, for listed company, if you are a listed company, you have to form audit committee. But if you are just a public company and not yet a listed company, and if you fulfill any of the criteria given by the section, you have to form audit committee. So which are these criteria? The first one is your paid up share capital is greater than equals to 10 crore rupees. The first criteria is your paid up share capital is greater than equal to 10 crore rupees. Your second criteria is turnover. Paid up share capital forms a part of balance sheet. Parts of form of balance sheet. From balance sheet we are coming to P&L, that is turnover. So what we are going to do, 10 into 10, it's going to 100 crore. So turnover, if you have a turnover of 100 crore or more than 100 crores, you have to form an audit committee. Or the last part, this part is something which people tend to forget. So what this last part is, I will explain it in a very lucid manner. See, how many criteria I told you? There are 3 criteria to fulfill. If as per Companies Act, if you have 3 criteria, any one of those is fulfilled, you have to form audit committee. Either it's a paid up share capital, it's a turnover, and the third one is we are going to discuss. So 3 criteria. So in the third criteria also we have 3 components, that is outstanding loans, debentures plus deposits. Easy trick. So 3 criteria, any one of this you fulfill, you have to form audit committee. First one is paid up share capital of 10 crore or more. Okay, I don't fulfill it. Okay, so turnover 100 crores or more. Okay, I don't fulfill it. Come to the third one. In the third one, there are 3 things you have to aggregate. First one is outstanding loans. Second one is debentures. Third one is deposits. So if you have outstanding loans plus debentures plus deposits of greater than 50 crores, not equal to, guys, not equal to, right? So from 10 crore of paid up share capital, we multiplied it into 10, we came to 100 crores of turnover. Now when we are going back to balance sheet, we are going to divide it by what? We are going to divide it by 5. So 100 crore divided by 5 gives you 50 crore. And whenever loans come into play, whenever debentures come into picture, whenever deposits come into picture, there's never equal to, it's always greater than, it's always excess. So paid up share capital of 10 crore or more, audit committee, you need to have audit committee. Turnover of 100 crore or more, you need to have audit committee. Outstanding loans plus debentures plus deposit, that is the third criteria, having three components in it: outstanding loans, debentures, deposits. Greater than or in excess of 50 crore, you need to have an audit committee. So this is what Companies Act is stating, right? This is how Companies Act is playing it's part of audit committee. So see, there's a simple formula that I have given here. If paid up share capital, you multiply it by 10, you come to the P&L, it comes to 100 crore, that is turnover. You're again going to balance sheet with the three components that there: debentures, loans and deposits. Divided by 5, it's come to 50 crore, right? The other way of remembering this 50 crore is, see, there are total 5 components. One is paid up share capital, second is turnover, third is outstanding loans, fourth is debentures, fifth is deposits. So you have 5 components. So 100 crore divided by 5 gives you 50. Always remember, it is this both criterias are greater than equal to, but this is in excess of or more than 50 crores. Now, when to check this? When to check that the paid up share capital is 10 crore or not, turnover is 100 crore or not, right? So might be a case that there have been tremendous sales return due to some defective product being manufactured, and the turnover that has been reported as 100 crore till December is now only 95 crore due to tremendous amount of sale returns. So for this 95, should this 100 crore be considered as on December, or this 95 crore as on the year end should be considered? So Companies Act states that it should be checked on the last date of the audited financial statement, that is 31st of March, right? So on that date we had 95 crore, so no audit committee. This is clear, guys. This is very easy, very basic foundation of the first part of audit committee, right? Now it is not applicable to whom? 3 people. Again 3 here, again 3. First is JV, second is WS, fourth is dormant. So JV is joint venture, second is wholly owned subsidiary, and third is dormant company. So audit committee is playing its everything around 3. This chapter special number is 3. Always remember this. This is going to get relevant afterwards also. So 3 criteria for audit committee we discussed right now. Moving to the next thing. Now ignore this. While making the notes I have also used this language. Now what will be the composition of audit committee? The companies that told me, okay, you have to form an audit committee, I have formed an audit committee. But how could I form it? Like, who will be there now? Okay, on paper I might say, okay, I have formed an audit committee, but who will be the people there? So the first thing would be, the people in the audit committee should have the basic thing, that is they should know how to read and understand financial statements. If they don't know what is a P&L, if they don't know what is a balance sheet, it is going to get converted into a government company, which is not going to work efficiently, right? So yes, the audit committee's composition, the people, the members of the audit committee should have the ability to read and understand the financial statements. This is the first basic criteria. Second thing, again 3, it should have minimum how many? 3 directors. Again 3, see 3 number is coming again, so it should have minimum 3 directors, and majority should be independent directors. Okay, so how you are going to remember again that 3 directors criteria? Obviously for audit committee there were 3 criteria: paid up share capital or turnover or those 3 components. So 3 things, again here 3 directors. So that's how you are going to remember this. So criteria for audit committee application is like you need to have minimum 3 directors. Okay, now comes what the audit committee is going to do. I have formed it. You told me which people to put in. I have put them inside. Now what they will do? What will be their functions? So the Companies Act states that the audit committee will have roughly 8 functions to perform. Okay. Now what I have divided it? I have divided into 3-3-2 rule. Divided these functions into 3 and 2 rule. 2, our favorite, others. Everywhere it comes others. So what does others means? The audit committee is going to evaluate the internal financial controls and risk management system. See, audit committee is something which is inside the company. It is a part and parcel of the company, right? But it does not have to manage the company. What it has to do, it has to supervise. So it has to evaluate the internal financial controls and risk management system. This is the very first other point. Second thing is approval or any subsequent modification of transactions of company with related parties, right? So what is there? Audit committee, whenever a company has to get into any related party transaction, it has to take the audit committee's approval. So this point we will come back to this after this discussion, right? So 3 auditor related and 3 balance sheet related. What is auditor related? What does auditor related means? It basically means when auditor comes, when auditor stays, and when auditor goes. Basic. So the first one is recommendation for appointment and remuneration of auditors. Now who these auditors are? See, audit committee's first function is recommendation for appointment and remuneration of auditors. Now who these auditors are? Audit committee is recommending for whom auditors, like which are the auditors now? So these are the statutory auditors. Okay, these are the statutory auditors which the company is going to appoint for their statutory audit. So the first function of audit committee is to recommendation for appointment and remuneration of auditors. Second function again related to auditor is review and monitor auditors' independence, performance and effectiveness of audit process. Obviously, when these statutory auditors will come in, they are not going to celebrate they're not going to welcome them. Okay, come sit, have tea. No, we are going to check. We have appointed you, we are paying you. We need to check what you guys are doing here. So what they will do, what audit committee is going to do, that whenever these auditors will come, it will review and monitor his independence. Obviously, how much independent he is. Second thing, they will review, they will monitor his performance, and they will also review and monitor his effectiveness of his audit process, right? So it's not going to be that okay, come sit, have some tea and go home. No, we are going to supervise you also. Like even if you are statutory auditors, you are not going to be king. Okay, audit committee is there to review you, your function, your audit process. And the third one is the examination of the financial statement and audit report. The biggest tool that we guys have as a chartered accountant is reporting audit report. That's our ultimate thing that we have, right? So 3 auditor related functions that audit committee is going to perform. See, audit committee is an integral part of a company, of an organization. What it is going to do, it is going to do these 3 things related to statutory auditors. First thing, who should be the auditor, who should be the statutory auditor, so they will recommend it. They will recommend for appointment and remuneration of them. When they come inside the company for doing the audit, what is audit committee going to do? They are going to review and monitor their independence. Okay, how they are performing their audit, they are going to also check that. And the third thing they are going to do is their audit report. They will examine their audit report. Obviously, the audit committee will also consist of chartered accountants, right? So they are going to examine that whether the audit report is okay or not. Then I guess you guys have understood this. There's nothing more difficult. There's nothing difficult in this. There's no need to have some trick. Whatever I have bifurcated, 3 auditor related, 3 balance sheet related and 2 others. Even if you go by this way, it's going to be very easy. There's nothing so much difficult in this part at least. Now, what are the 3 balance sheet related? Obviously, audit committee is going to have a check on the loans. You know na that loans is the most vulnerable part. Like even companies that prohibit giving loans to directors, right? So what the audit committee is going to do, it is going to have scrutiny of intercorporate loans and investments, right? Intercorporate loans means loans given to other companies. So it is going to have a scrutiny of them. Second is, it is going to have loans is a part of liability side, right? Now related to asset side, what is audit committee is going to do? It is going to keep the valuation of undertakings of assets. Okay, so one is liability related, that is intercorporate loans. One is asset related, that is valuation of undertakings of assets, and checking both of them now. That is, if you have raised funds through IPO, if you have raised funds through FPO, so the funds are coming. Now you're going to utilize these funds. You're going to buy assets, or you're going to lend, or you're going to use it into your business. Obviously, that is basically buying assets. So monitoring the end use of the funds raised through public offers. So 3 balance sheet related. Done. One is liabilities related. You can also remember this, like this is liabilities related, this is asset related, and this is capital related. You can roughly remember this like this. Okay, and then 2 others. Now we are going to the other part of this. The first one we have discussed this, that is evaluation of the internal financial controls and risk management systems. Okay, second thing, approval or any subsequent modification of transactions of company with related parties. See, audit committee has a very greater and important task to do, and that is that whenever there are any kind of related party transactions, audit committee has to jump in. It has to check whether this related party transaction is genuine or not, whether it is at market terms or not. Okay, so what Companies Act has stated that you need to have permission of audit committee for any kind of related party transaction that you enter into. But then audit committee is not something that is working in the company whole and soul day and night, right? So see, they are a committee to supervise, they are not a committee to work. So it's not going to happen that every time a related party transaction is going to be entered into, then we have to call, okay, auditor, we need your recommendation, we need your approval for the related party transaction. No, what audit committee will do is they will make a omnibus approval. They will make an omnibus approval. That is what, for example, for any transaction up to rupees 70 lakh rupees related to related party transactions in a financial year, you can do it on yourself. This is what audit committee will say. We will not going to come again and again. We are giving you an omnibus approval that okay, you conduct the transactions which are up to rupees 70 lakhs in a financial year with a specific party. That is omnibus approval. Okay, but then second thing is that what happens if you have entered a transaction which is smaller than or equal to 1 crore rupees. Okay, now company has entered into a transaction with a related party which is smaller than or equal to 1 crore rupees, and this has been entered without the approval of the audit committee. Okay, there is no omnibus approval. There's no omnibus approval now, and without the audit committee's approval, you have entered into a transaction with a related party which is amounting either rupees 1 crore or less than 1 crore, and in that case, if audit committee has not ratified it within how many months, the magical number of this entire chapter is 3. So within how many months? Within 3 months, then such transaction shall be voidable at the option of the audit committee. Okay, and if the audit committee makes it void, whoever has entered into the transaction, say a director has signed that contract, he has to reimburse the entire loss. He has to compensate the company for it. Okay, got this? Easy points, nothing to be a parrot type like. Okay, so it's all about the concepts. Now, what are the powers, what are the authorities, and what are the rights of audit committee? This is again Companies Act stating that okay, audit committee, these are your certain powers, these are your certain authorities, and these are your certain rights. Now tell me guys, when do you use power? When we use power, can you just be some more like see, I want you to think somewhere more practical, right? And at the same time not take the examples very realistically. Okay, so I guess I hope you are getting me. So whenever you're using your powers, obviously you are going to use it when it is extremely necessary for you to do it, right? So it is going to be a discretionary powers, right? So when you need it, okay, I need to use a power right now, then you will use it. Same way, authorities. So what are the authorities? How you use your authority? See, somebody gives you authority only and only when you have some expertise, okay, and you use it every time you think that it is necessary to use. So authorities are given to investigate, basically. That is it is necessary to investigate, and you have that expertise. Powers are used in discretionary modes whenever you need them. And then is the rights. Obviously, what is a right? Whenever there's certain pain to us in this nation, if there's something that is paining me, what I'm going to do? I'm going to cry out, right? So right is what? Right to be heard. Okay, so this is kinda practical but more or less hypothetical. Okay, so this is just for the sake of you guys remembering what Companies Act is trying to say. It is trying to say that whenever I am giving you certain powers, use it with discretion. Don't use it abruptly. When I'm giving you certain authorities, I feel that you have some expertise. That's why I am giving you authorities. So use that authority whenever needed. Don't use it discretionally. Use it when it is very, very necessary. And third is rights. So I am also giving you right. Even after using your powers and authorities, you are not being heard. I am giving you a right that you will be heard. There will be your right. So yes, section 177, 5, 6 and 7. These three deals with powers, authorities and rights of audit committee. So discretionary powers. What are the discretionary powers? What audit committee can do? What audit committee can do? See, audit committee can call for the comments of the auditors. Who auditors? Statutory auditors. So statutory auditors have now entered the company. So what audit committee will do? They will take out their cell phone. They will call. Okay, stat auditor, come to my office. I need your comments on the internal control system that my company has. Okay, so yeah, they can call for the comments. This is a discretionary power. See, they are using it. They may call it if they feel that there's something lack in the internal control, but they are not able to trace it. They are going to ask the stat auditor that please come and explain me how's my internal control system is. Even do you also feel that it is lacking somewhere? Second thing, what they can do, they can review the financial statement before submission to the board of directors. See, this is the power. Once it goes to board of directors, and once the board of directors approve it, it will go to directly to the shareholders. But you are given a power here. a discretionary power that you can review the financial statement before it reaches to the desk of the board of directors. So second power, and the third power is discuss related issues with the management, internal plus statutory auditors. Okay, so you have the power, you can discuss any matter that you feel is very important with the management, with the internal auditors that you have appointed, and with the statutory auditors that also that whom you have appointed, or we can say the shareholders have appointed. So everybody clear about this discretionary powers? Three discretionary powers. First, call the auditor, stat auditors, and ask him about the comments on your internal control system. Second thing, review the financial statements before it reaches whom? Before that it reaches the desk of the board of directors. And the third thing, that is discuss the related issues with whom? If you want, you can discuss them with the management, with the internal auditor that you have put in, and with the stat auditor that shareholders have put in. Now, authority to investigate. Where you can investigate? We have recently read about that related party transactions is something which is very critical part of an organization. And audit committee has that authority to investigate. So as a chartered accountant, we don't have investigative powers anywhere, but here we are getting something. It is also a limited power, but yes, we are getting it. So authority to investigate into any matter that is related to the items of 177(4), that is related party transactions. So any related party transactions you are feeling, oh no, there's something is wrong going on this, just stand up and tell them, I have the authority to investigate, I will. And nobody is going to stop you. Because it is the law that has given you this authority. And while investigating, if you think that you are being kept devoid of certain information from the organization, the management knows this. See, the management knows this section. If they know this section, they know that if they deal into a related party transaction, and if the audit committee tomorrow comes to investigate, they have to cooperate, because that's what this section says. But then what they will do? They will do this so secretly, in a so proliferated manner, that the audit committee will be kept devoid of all and every matter and every fact of this transaction. So what he can do is, he can obtain professional advice from outside, right? From professional advice from external sources, and obviously he will have full access to information contained in the records of the company. So if auditor comes and goes, when the accountant is having a tea break, and if auditor goes and tell him, keep the tea aside and show me this computer right now, I want to see the journal entries, and if the accountant says, no sir, the manager has told me not to show you this, then what he will do? He will just take it out and show him this section, that I have this authority, you have to show me. Nothing can be put out in front of them. Then comes, I hope this is clear. That authorities are clear. Then comes the rights of the audit committee. What are the rights of the audit committee? Obviously, it is like in Hindi people say it is the barking right, like the dogs bark. So we have a barking right basically, but this shouldn't be taken in a negative manner. This was a trick to remember this. So auditor always have a right to bark. That is, auditors always have a right to be heard. So where they will be heard? Will they go in a BJP rally and talk about this, or will they be going in the Rahul's Bharat Jodo Yatra and talking about this? No. You cannot go in all these things. What you have to do is, you have to talk, you will get a right to heard in a meeting of audit committee. So when audit committee is meeting, they are having some meetings with them, the statutory auditor can go, and they can speak up there. Okay, and obviously whenever auditor's report is being concerned, you have prepared it, the statutory auditor has prepared this report. So whenever auditor's report is being considered, the auditor plus the key managerial person shall have the right to be heard. And obviously something here I have cut this down, that is right to vote, that is they cannot vote, no auditor can vote it. Okay, so these are the powers, these are the authorities, these are the rights of the audit committee. The next thing, board of directors in the board's report under section 134(3). What is this? The board of directors are going to issue a board's report. Obviously they don't want to issue, they don't want to do anything except business. It is the act that is putting them, okay, do this, do that, and that's why they have to do it. So board of directors is what is going to do? They are going to issue board's report under section 134(3) of the Companies Act. So under that report, they also have to show the composition of the audit committee and recommendation of the audit committee which they have not accepted, and the reasons why they are not accepted. So what are the recommendation? Might be a case where audit committee has told them that okay, appoint Mr. A as auditor, but board of directors is not agreeing because Mr. A is already auditing some other firm wherein we are having substantial transaction with which. So that is the reason, and we have not accepted the recommendation. Same way with related party transactions, somewhere audit committee has told us do this or don't do that, and we are still going with it. So if we have some good reasons, we are going to do. And this board report thing, you have studied this in your senior KG, that is CA Inter. You have discussed about this there. Vigil mechanism, this is one of the most hot topic according to me. This can come into exam any point of time, whether in MCQ or a question of 5 marks at least. So get ready, this is a very easy part. Now this is a Hindi statement, but it basically means that bhai loan de 50 crore ka, that is means brother give me a loan of rupees 50 crore. You can also learn this. It is a shortcut. It is a shortcut to learn what? Applicability. So vigil mechanism is applicable to whom? Vigil mechanism is applicable to whom? Vigil mechanism is applicable to companies. From B comes always borrowings. From B always comes borrowings. From L always comes listed companies. From D always comes deposits. And 50 crore, obviously it must be some criteria. So where it will be? It is here, borrowed. So applicability is companies which have borrowed money from banks and public financial institutions in excess of rupees 50 crore. Whenever loan comes, whenever borrowing comes, it is always in excess of, it is never equal to, that is excess of rupees 50 crores. Now the word here used is companies. Private limited, public limited, dormant, nothing. The word you here used is companies. So if you are fulfilling this condition, you have to have a vigil mechanism. So companies having borrowed money from banks and public financial institutions in excess of rupees 50 crore need to have a vigil mechanism. Second thing, so first one was bhai loan de 50 crores ka. So B was, that is brother give me a loan of rupees 50 crores. The first one was bhai, that is B, that is borrowed, and 50 crore is utilized here, that is 50 crore. L, brother give me a loan of rupees 50 crore. Bhai loan de 50 crore ka. What is L? L is listed company. So every listed company has to have a vigil mechanism. Every listed company has to have a vigil mechanism. They, yani give me. D, what is D? D is basically deposits. So companies which accept deposits from the public. Is there any limit? No. Even if you have accepted rupees 1 from public in the form of deposits, you need to have a vigil mechanism, right? So borrowings in excess of 50 crore from whom? Banks and PFI. From government? No, not from government, not from private lenders. It is from banks and public financial institutions. Loan, not loan L, that is listed companies. D, that is deposits. If you accept deposits from the public, you have to form a vigil mechanism. Now comes this confusion, sir, whether only public companies or whether only private companies or only listed companies. No guys, no, it's neither public neither private. What the word uses? Company. So every company is going to get here, even public, even private, even listed, everything. If it fulfills any of one of these criteria, that is 50 crore of borrowings or listed or deposits acceptance, you have to form a vigil mechanism. Now why you need to have a vigil mechanism? You need to have it for directors and your employees. Obviously you have employees, every employee is in a mood to complain that the company is very bad to work for, but obviously this vigil mechanism is not for that. We're going to discuss about what it is for. So yes, it is going to be for directors, for employees. So can a pani puri wala bhaiya who is having a stall outside the company and to whom the company is telling, please get away from here, this is our land, can this pani puri wala bhaiya complain through vigil mechanism? No brother, no. Why? Because he is neither an employee neither a director. So what he has to do, he has to join the company as an employee, and then only he can use the vigil mechanism. So yeah, for whom the vigil mechanism, it is for the directors and employees. And why it is there? Why directors or employees need a vigil mechanism? To report their genuine concerns or grievances. Okay, so it may be related to anything. Okay, it may be related to their remuneration, it may be related to their promotion, it may be related to the company, to the behavior of the manager, anything is covered. Okay, so it has a very wide scope. Vigil mechanism has a very wide scope. So obviously it need to be genuine concern. You cannot just go and bluff that because your manager scolded you yesterday for not doing a job very great, you're going and telling that he's he's out of his mind, please do something to him. No, your concern needs to be genuine, your grievances need to be genuine, okay? And what it should provide for, so the vigil mechanism should provide for adequate safeguards against the victimization. Obviously, you have complained about your boss to your senior manager. The next day, your manager hires somebody and kills you. So that shouldn't happen. Or he just tells you that you have told about me, na. Now just see what I do to you. You're going to get dead by tomorrow end. No, the vigil mechanism should have adequate safeguards against victimization of them. They should not feel that if they complain, they are going to get the manager is going to kick them out of the company. No, they should not feel this. And the second thing, obviously, if it in case the employees or the directors are in need of it, there should be a provision in vigil mechanism that these directors should be provided a direct access to the chairperson of the audit committee. So if they are seeing that there's something going fishy with the manager, there he is dealing something into very wrong, and he knows that if he goes to some senior manager, they are also involved in it. So vigil mechanism will have a provision that okay, you can go directly to the chairperson of the audit committee. So then it becomes a kind of a way where you will get justice. Roughly in India, justice is something very costly and very not dearly. But still, vigil mechanism is trying its best. So that's how we have completed with our vigil mechanism. And yes, we have completed with the Companies Act part. So clap for yourself. You're going to the next component of this chapter, Regulation 18 of SEBI LODR Regulations 2015, and again Audit Committee. Why this Audit Committee is coming again and again? Now recently I have read about it on the previous pages. Now again, why? This is because when you were at the lower step, it was the Companies Act that was governing. So at Companies Act governs every company, right? So the provisions were little not stringent, little flexible. Now you're listed, brother. Now you cannot act like Adani. Okay, Adani. So you cannot act like that. So now the provisions will be one step higher. They will be more stringent. So now we are going to learn. Now we are going to study about the Regulation 18 of the SEBI LODR. What is LODR? Do you guys remember? Listing obligations and disclosure requirements. And to whom these are applicable? Only and only to listed companies. Only and only to listed companies. Only and only to listed companies. So keep this in your mind. So what is the requirement? Audit committee. Again, the magical figure that we love, 3. So audit committee shall have minimum how many? 3 directors. The same was stated by Companies Act. So it should have minimum 3 directors. And yeah, this is the amendment. At least 2/3 shall be independent directors. So if you have 3 directors, at least 2/3 of them should be independent directors. Obviously, if the directors are not independent, what the hell the audit committee is going to do there now? It is not going to do anything. It cannot do anything. The directors are only interested in the working of the company. They are not going to take any action. The vigil mechanism will be just a document thing now. Nobody will come forward. So yeah, if you have 3, you need to have minimum 3 directors in the audit committee, and 2/3 of them should be independent directors at least. So before May 23 attempt, this word was not there. It was only 2/3 shall be independent directors. So what it was interpreted, what we used to interpret is what that stagnantly only 2/3 number should be independent, not more than. So if I want to keep more than 100% of the audit committee is independent, I would not be able to, because the wordings were 2/3 shall be independent. But now, since the word has been added at least, right, at least 2/3 shall be independent, I can keep the entire audit committee as independent. Now you'll say, who wants to have 100% of the audit committee is independent? Nobody wants to have a check on them. Basically, it will not be the board of directors who will feel, okay, now we need to have the complete audit committee as independent. No. It will be the shareholders. Okay, the shareholders will push them that no, we need to have the audit committee completely independent. We need to have them to supervise you. Or it might be some stakeholders. There's some investor coming in, say a foreign investor. He's coming and he wants the entire audit committee to be independent because he don't trust you. So in that case, that was the issue we were facing, and that's why this word is added, at least 2/3 shall be independent. Now for the instance, the very important, very special and very useless point in this chapter, if the company has some special right, that is superior right equity shares outstanding. Obviously, what is superior right equity shares, you have studied in your senior KG, in your CA inter. So if you have certain superior right equity shares outstanding, then all the audit committee should be independent directors. Okay, so the entire audit committee should consist of only independent directors. Everybody clear of this? Everybody clear of this? I hope you guys are not getting bored, and even if it is, please stay, please stay. We need to complete this, and we are going to complete this, and this is going to be in depth. Even if you compare each and every page of your ICI module with my notes, trust me, not even a single letter or single word is being skipped. I have compiled everything in a very systematic manner. Now again, the same thing again, how the member should be, they should be financially literate, and at least one member should have accounting or financial management expertise. Now financial literate means what? Obviously he should be able to read and understand the financial statements, else we have no use of him. And what does related accounting, financial management expertise and all this big junk word means? This means that she possesses experience in finance or accounting, including he might be ex-CEO, ex-CFO certain companies, so we will consider him as that he has the relevant expertise. You can read this, it's not that important. What is important is this part, that all the members should be financial literate, and at least one should have accounting or related FM expertise. Now the chairperson, how should be the chairperson of the audit committee? Should be, obviously he should be an independent director. So the chairperson of the audit committee should be an independent director. Okay, independent director. Now what he is going to do? We always know who works, article works, principal. At least for articles, principal never works. Even when principal is working, what we feel? No, the boss is not working. Only we employees are working. So the chairperson is going to be the ultimate boss. So whether he's going to work, we don't know whether he's going to work or not. But SEBI says he needs to be present at the AGM to at least answer the shareholders. So basically, who are these shareholders? I can simply say that this chairperson is our teacher, or we could say this chairperson is our boss, is our principal, and this shareholder are our parents. And they are having some queries, and they are having a meeting with our principal that why you are keep taking his 12 hours into office. He needs to study for the CA finals. And the chairperson has to answer them. So he'll answer them, I didn't ask you to come to me, you came to me. Now the fourth one is, obviously at its discretion they can invite the finance director, the head of the finance function, the head of the internal audit, representative of state auditor in its meetings. So yeah, they can invite them if they need certain kind of suggestions, certain kind of consultations, or they are not able to understand something regarding the company. They can invite the finance director, they can invite the head of the finance function also. Then comes who will act as the secretary to the committee. What is basically secretary? Basically whatever the committee is going to do, whatever the committee is going to have meetings with, talk with, somebody should be there who is making the minutes. Somebody should be there who is basically able to consider that okay, whatever has happened, then summarize them. If if a member of audit committee wants to attend the meeting in a video conferencing mode, then somebody should be there to paper down everything that has happened in the meeting, whether it is in the physical mode or video conferencing mode. So who is going to do it? It is going to the company secretary. So the company secretary shall act as the secretary to the committee. Everybody okay? Everybody okay with this? Everybody okay with this? Any kind of issues? I hope there's no you might be feeling why I'm talking like this. I mean, you are watching this video and I'm asking everybody okay, but then that is going to, even if someone is asleep, he's going to get awake with this. So meetings, how many obviously for the meetings, how many times it should meet? How many times the audit committee should meet? It should meet at least 4 times a year. At least 4 times a year. Now the word used is year. Neither financial year nor calendar year. So no specific wording are used. So what we will assume? We will assume it as calendar year. And don't worry, ICI is never going to ask you this as an MCQ, that what does this year means, whether a financial year or calendar year. No, it's not in our context, but basically as a general interpretation we will take it as a calendar year. So 4 times a year audit committee is going to meet, and within 2 meetings within 2 meetings, any 2 meetings, the duration, the lapse should not be greater than of 120 days. Okay, so if your first meeting is on X date, this should be your next meeting on, that is X plus 120. That is not 120, I would say 119. Okay, so 120th day. Basically, the delay should not be more than 120 days. So everybody, this is also easy part. There's nothing difficult in this. Now, the for the first audit committee meeting, only one person has come. Can he conduct that meeting? No, brother, no. You need to have quorum. You need to have quorum. We have read this in our senior KG, that is CA Inter. Okay. So what is quorum for audit committee? You have 3 members at minimum. We have read that you need to have 3 members minimum. So what is the majority for 3 members? 2. So for 2 is the majority of 3 members. So basically the quorum is 2 members or 1/3 of the members, whichever is greater. Right, so 2 or 1/3 of the members, whichever is greater, is the quorum. So for an audit committee, if 1 member or 2 members come, they cannot have that meeting conducted. They need to adjourn it, or basically it will not even start. Okay, it will not even initiate. So you need to have either minimum 2 members or 1/3 of the members, whichever is greater, as your quorum. So that's all with it. Now comes the powers of the audit committee. What audit committee can do? Obviously, audit committee can go into any matter in any depth. So it can investigate any activity within its term of reference. Obviously, they cannot go and ask a company why you are producing this product and you're not producing the other product. Okay, that's not their term of reference. But they can surely ask why this related party is being favored and why this individual or this third party is not being favored, or we are not dealing with them. Why this is happening? So yeah, they can investigate into any matter. For investigation, obviously they will need information. So what they will do, they will seek information from any employee. And if that employee, when he is having his lunch break, if he is telling the audit committee, you cannot do that, I am going to take out my paper, this paper, and I am going to show them, okay, that I have this power. Okay, SEBI LODR has given me this power. So I can seek any information for any investigation. Now while seeking information, I feel that okay, this is outside my expertise. What I can do, I can take an outside legal or professional advice. And obviously I will tell these legal people, okay, please do come to my meeting. I need your help. So we can secure attendance of outsiders with relevant expertise. So we can seek their attendance. So these are the basic powers. Now till this moment of time, there was nothing as such that we need to learn, that we need to be a parrot about, right? A parrot. Okay, so there's nothing like that till now. That's why there's no shortcut. We have used it. Okay, now what is the role of audit committee? ICI has given such a great list of this role that even if you read this for 10 continuous days, you are not going to get used to it. Okay, so what I would suggest, you just read it once or twice, because I believe in a strategy that we should not leave anything, but that does not mean we should invest more or less more time on every aspect. So what you do, this is a very not important thing. This will never come into MCQ. This will never come into brief. That's my guarantee. Even if you take a trend of the previous questions for the MTPs, the suggested, the RTPs, everything, there's nothing regarding this. Still, as a part of your preparation, just read this once. I have directly copied from ICI module. Just read it once. And this point is only important. That is, what is happening is that if a holding company has given a loan, or some investment in the subsidiary company which is exceeding rupees 100 crore. So if a holding has given something to subsidiary which is exceeding rupees 100 crore, again the word exceeding and not greater than equal to 100 crore, or what, 10% of the asset side of the 10% of the asset size of the subsidiary, or 10% of the assets of subsidiary, whichever is lower. So 100 crore or 10% of the asset size of the subsidiary, whichever is lower. If I have given some investment, if I have given some loans which is exceeding this amount, then the audit committee has a role that it can review the utilization of it. So whatever money I have given to the subsidiary, what the subsidiary is doing with that, I can go into that. Now comes the very important part, something which is much needed, mandatory review areas of the audit committee. 100% probable question from here. what are the mandatory reviews of the audit committee, or they will just form a case study and they will miss out on certain 2-3 mandatory review areas, and they will ask whether the audit committee has complied with its LODR functions or not. So we are going to do it. The shortcut for mandatory review areas is FLICT. FLICD, FLICT. I was not able to think anything more than this, that's why FLICT. So what is FLICT? The first one is I will go to the management and I will tell management, please look into my profit and loss and balance sheet. Please look into my profit and loss and balance sheet. So management discussion and analysis of financial condition and results of operation. What is financial condition? Basically balance sheet. What is results of operation? Basically P&L. Okay, so I'm going to management, please look into my P&L and balance sheet. So management is looking into your financial condition and result of operation. So the first mandatory review areas of the audit committee is what? The management discussion and analysis of financial condition and results of operation. After looking into your P&L and in your balance sheet, management is thinking that there is some issue. There are certain deviations that they are finding. So what they will do? They will make a statement of deviation. Okay, the statement might be quarterly, the statement might be annually, whenever I'm showing them. So a quarterly statement of deviations including report of monitoring agency and annual statement of fund utilized for purposes other than those stated in the offer documents. You have raised some IPO, you have raised some FPO, and this was for, say for example, a new business, say a beverages business, but now since the beverages industry is going down due to corona, these funds are lying idle. So now what you have done, you have used them to invest in some FD. Okay, FD. So what you are doing, basically you have done a deviation. You are using the funds which are raised for X purposes into some Y purpose. So yeah, audit committee has to review this. So as far as our example was concerned, management first saw your P&L and balance sheet, that is your financial condition and your operation results. Now they have found certain deviation. That is the second point. We are into statement of deviation. That it may be quarterly statement of deviations. It may be annual statement of funds utilized for purposes other than those stated in the IPO. After finding the deviations, what management will do? After finding the deviation, the first thing management will do is call their chief internal auditor. Brother, what is this happening in my company? What the hell? So they will now go to the chief internal auditor. So this point is what? Appointment, removal and terms of remuneration of chief internal auditor. So management looked into your P&L and balance sheet. Management saw some deviation. Now management is calling the chief internal auditor. What the fuck is this? What is this? So appointment, removal and terms of remuneration of chief internal auditor. This is what audit committee has to mandatorily review. Now what the management is going to do? It is going to write a report. It is going to write a letter or report to this chief internal auditor that if you don't show me the reasons why these deviations are there, you are dead. So the management now wrote letters of internal control weaknesses issued by the statutory auditors. This is going to be the next mandatory review area of the audit committee. So this is how you are going to remember, right? Management letter or letters. And what these letters are, these are basically the internal control weakness letters issued by the statutory auditors. And the last thing, what this chief internal auditor will do, it will reply to the management that management, you have certain internal control weakness. It is not my responsibility. So internal audit reports to internal control weakness is the last mandatory review areas of the auditor. So if I instantly ask you, tell me the mandatorily review areas of the audit committee, you need to go into my example that management is looking into your P&L and balance sheet. That is your financial condition and results of operation. Management finds a deviation, that is statement of deviation. This fifth point. Management after finding a deviation is taking out his cell phone and calling whom? Calling directly the chief internal auditor. That is appointment, removal and terms of remuneration of chief internal auditor. And they are writing a letter to him that if you don't do this, we are writing your resignation letter, literally resignation letter. So what is the next point? Management letters of internal control weaknesses. And the last thing the chief internal auditor is going to reply to them is, sir, you have internal control weaknesses. So these are the mandatory review areas of the audit committee. This was one way of learning it. Second is the FLICT way, FLICD. Okay, all guys, cool. And this is the May 2023 amendment, statement of significant related party transactions submitted by the management. Now audit committee has no role. The audit committee has no mandatorily review has to mandatorily review this. Okay, so audit committee doesn't have to mandatorily review this. Now we as a statutory auditor is going to check whether audit committee has reviewed the mandatory areas or not. Okay, and from where you are going to verify this? Obviously from the minutes, okay, the agenda papers and all those things. And these are certain questions. We are not going to discuss them because this is a quick in-depth revision. We are going to the next concept, the role of auditor in audit committee and certification of compliance of conditions of corporate governance. Such a big headlines, my god, but the content very easy content. So what the statutory auditor is going to do in the audit committee, this role of auditor in audit committee. Who is this auditor? This is basically the statutory auditor, that is we who are going to go externally. So what is our role in audit committee? So as we have read in section 177 and regulation 18, section 177, what we have read, we have the right to bark, that is we have the right to be heard but no right to vote. So this is the statutory requirement. This is my role in the audit committee. I can say anything. And what is regulation 18? It told it there was there, see, representative of the statutory auditor be invited to the meetings. We saw there that we can be invited. So yeah, even in Companies Act, even in LODR, auditor, that is statutory auditor, has certain role to play in the audit committee. Very easy. That's all. That was the only it. Okay, so the heading was very big, but basically this was the summary of it. Now the most favorite part, SEBI LODR regulations 2015. SEBI LODR regulation 2015. I assure you, if you just watch this video twice, or if you go through my notes at least twice, SEBI LODR will be on your fingertips. Guarantee. Now applicability, to whom it is applicable? Obviously listed companies, guys. I have told you whom, listed companies, but which listed companies? So there is certain condition here. The companies, the listed entities which has listed any of the following on recognized stock exchange. What? Non-convertible securities, IDR, security debt instruments, security receipts, and all these things. Okay, it's not relevant as such for us, but please have a read, please go through it. Now yeah, ICI also told something to us that if these regulations, these LODR regulations become applicable due to market capitalization, then even if the market capitalization falls below the threshold, the regulation will still apply. This basically means that if this SEBI LODR regulation applies to you due to your market capitalization, say you are we are going to learn about this, that you are among the top 1000 listed entities, you are among the top 2000 listed entities. So this is basically market capitalization. Now what happens is, because due to certain X factor, your market capitalization is now lowered, and now you're not among the 1000 or 2000, you are say 3000. Just what happened to Adani, right? Adani LODR was applicable, but now the market capitalization has fallen way below. So in that case also, the regulation will still apply. Now board composition, the very important thing that we are going to study now. Regulation 17(1), board composition. So what is board composition? What this actually means? So LODR starts with the very basic factor that who is going to be the corporate governance ka main what say focus point? Board is the only one who has the responsibility for having a good governance. So how this board should be, when I am talking to you, and if if my screen is very small, like everything is black and I'm visible in a very small area, that's not going to good look, right? So what I need to have an optimum resolution. I need to have an optimum screen area. That is what board also needs to have. It needs to have an optimum combination of whom? Of the one who are not going to work at all, that is non-executive directors, and the one who are going to work little executive. So the board of directors composition should be a very optimum combination of the executive directors and non-executive directors. Now what is optimum? You will ask me, what is this ratio, sir? So basically it means that non-executive directors should be 50% or more of the total board of directors. Okay, so the one who are not going to work should be 50% or more than 50% of the board. So this is going to be the optimum combination. Now then comes this thing, equality. You are not considering women, so yeah, you need to have at least one woman director. You need to have at least one woman director. She may be executive, she may be non-executive, whatever the case may be, but you need to have at least one woman director. And as I told you, that the board of directors should be greater than equal to, that is, the non-executive director should form 50% or more than 50% of the board of directors, and this becomes the optimum combination. Now what will happen is, this one woman director, see, there are many males and only one woman. Who is going to listen to her? Okay, who is going to listen to her? So what SEBI LODR says, okay, so if you form the top 1000 listed entities, if you are basically top 1000 listed entities, you need to have one independent woman director. Okay, so the number is unchanged. You need to have one, but one independent woman director. So what happens when the woman director becomes an independent director? Her powers exponentially goes to a next level. Whatever she is saying, it will be considered to a next level. Okay, because she is now an independent director. If she makes any statement about the company, it is going to be very critical because independent director, right? So, and how you're going to determine this top 1000 listed entities? On the basis of market capitalization as at the end of the immediate previous financial year. And what if you go to 1001 on 1st of April? You need to comply with this again, because what we have read out here, that if it is due to market capitalization, if something is getting applicable to you, then even if your market cap goes below, you need to comply with that provision. Now, top 2000 listed entities, top 1000, the new criteria was only one woman independent director. But if you are into top 2000 listed entities, your board of directors should have minimum 6 directors. Minimum 6 directors. Again, a lucky number for this chapter is 3, multiple of 3 into 2, 6. So for 2, that is 2000, top 2000 listed entities, you need to have minimum 6 directors. Getting the linkages, 2, 3 is the lucky number for this chapter. 3 into 2, 6 directors. And what is 2? Basically 2000, top 2000 listed entities. Now, if you have this again, special rights equity shares outstanding, at least half of your board should be independent directors. So that's why it's not good to have special rights equity shares issued, na? So you need to have at least half of your board to be independent director. We are going to talk about it, what is how much independent directorship you need to have. But for the time being, they have told us that if you have outstanding special rights equity shares, you need to have at least half of the board should be independent. Now, right now, Tata, Honorable Tata wants to be a chairman of Tata Group again, but his age is above 75. His age is again above 75, and LODR is saying that you cannot appoint or continue the directorship of a non-executive director who has attained the age of 75 or more. I'm not basically not chairman. He wants to continue his directorship. If he is not there, who is the face of the group then, right? So if he's 75 or more, and if LODR is saying that you cannot appoint, then there's no point. So what if Mr. Tata, we want to appoint him as a non-executive director and he is above the age of 75. You are saying you cannot, but I want to. So this is okay. If you want to, you pass a special resolution, and in that special resolution you annex an explanatory statement that because Mr. Tata is the very face of this company, he is someone from whom we get the spirit and all the light of this universe, then you are going to send this explanatory statement with the notice, which is going to be sent to the shareholders, and then shareholders will come, they will pass a special resolution, and then Mr. Tata can continue. Okay, so that's the process. That's the second thing here we have considered. Now what will happen is, you have appointed a director or a manager. Okay, not every time the shareholders are going to come and tell, okay, appoint this, appoint him. No. It is up to the board of directors. They will appoint someone as a director, someone as a manager. But once you do that, immediately after that, you need to, in the next general meeting, you need to take the approval of the shareholders. Okay. For example, you have appointed a director in January 2021. Example, okay, say January 2023, and your general meeting is going to get held in September 2023. Big chunk of time. In this time, this director can do anything that he wants to do, because he is not a choice of the shareholder as of 8. It is the board of directors that have appointed him. So either you take the approval of shareholder in the next general meeting or within 3 months of appointment. See, again our lucky number 3 coming. So within 3 months of his appointment, whichever is earlier, right? So January, February, March. So before 31st of March 23, you need to take the shareholders approval. So you convene a general meeting for him, or whatever other ways are possible that we have studied in our senior KGCA inter, you can go with them, right? Now the shareholders come, they are frustrated. You are calling us again and again for appointing the directors. We are rejecting. The shareholder just outrightly rejected the director. We don't want you. It was March for us. We were going and we were compiling our accounting data, and you are just calling us again and again that appoint him, because your law is stating that not more than 3 months should have elapsed. We are frustrated. We are rejecting him. Shareholders rejected the appointment. Now what? Obviously, what we do when someone says don't do that, we are going to do that. If they reject them, I am going to appoint him again. The board will again appoint him. But then LODR comes into play. They say no. If the shareholders have rejected somebody, you cannot appoint them again until and unless you take the approval of the shareholders first. Okay, so before, for the first time approval, or say for the first time appointment, you appoint them and then take the shareholders approval. Here what is happening, they have already rejected. They say we don't want this man, and now you are again appointing. No, you cannot appoint him until and unless you take first take the approval of shareholders and then appoint. And now you are taking approval, so you also need to give a detailed explanation and justification why you want to appoint him. And who will give this justification? The board of directors, obviously the one who is appointing, and the nomination and remuneration committee. We are going to deal with this again in the next part. But then NRC, that is the nomination and remuneration committee, and the board of directors needs to justify why we are again recommending him, why we are again appointing him, the one whom you have rejected. Okay, so chairperson of a company, 2 parts come into play again. There's a chairperson who is not working at all. That is who? A non-executive director. If he is a chairperson, SEBI LODR is saying, okay, we are fine with that, no issues. If your chairperson is not working at all, that is, he is a non-executive director, we are happy with it. But if he is not a regular non-executive director, if he is working, that is, the company does not have a regular non-executive director as chairman, then we are not happy with it. Then we need to think something about you. So when the SEBI is happy, that is when the chairman is not working, that is when he is non-executive director and acting as chairman, at least 1/3 of the board should be independent directors. At least 1/3 of the board should be independent directors. But if the non-executive chairman, he is not working, but bro, he was a promoter of the company, or he is related to the promoter or the person who are promoters, or he is related to the promoter group, in that case SEBI is not happy. Then SEBI will drop you here. What is this? That is, either the chairman is a working one, that is, he is not a regular non-executive director, or he is a non-executive director, that is, he is not working, but he was a promoter of the company, or he is related to the promoter or various persons of the company. In that case, at least half of the board should comprise of independent directors. You're saying, brother, why SEBI is imposing so much of things on us? That is because I again told you that when you are managing your family, you are going to do it in the best interest of them, not yours. So when your chairman is a non-executive one, he is going to have a better supervisory role. But when he is not a regular non-executive, he might be involved in certain transactions. In that case, SEBI is not that comfortable. They say, okay, half of the board should be independent directors. Now we are coming to independent directors. Now we'll say, brother, what is independent director? What does it mean? I would say independent directors means a director who is not a dependent director. No, SEBI is saying that is not how you are going to define independent. SEBI says, firstly, everybody know CHAS. Okay, in South India, this is a very controversial topic, but recently in South India, there was a war going on between Amul and Nandini. Okay, Amul was selling milk which has CHAS printed on it in Hindi, and people objected to it. And Nandini is a local brand available there. So that's why CHAS might get, you guys might remember this shortcut very well, CHAS. So what basically CHAS means? We have nothing to do with this controversy. It was just a part to make you remember. What does CHAS means? CHAS means the company itself, that is we, the listed company, our holding company, that is H, our subsidiary company, that is S, and our associate company, that is A. So CHAS means company, holding, associate, subsidiary, that is CHAS. Okay, CHAS in Hindi means buttermilk. Who is independent director? Obviously you are able to use your conscience, like you are not a mad immature boy. Obviously you need to have certain age, so you are 21 years of age or you are more than 21 years of age, right? Second thing, you are in the opinion of the board of directors a person of integrity, expertise and experience. Obviously board will always think you as that because they want to appoint you. But yeah, the condition is there that in the opinion of the BOD you should be a person of integrity, expertise and experience. Firstly, you are or you were never a promoter of CHAS. That is, neither you are a promoter of the company holding associate subsidiary, neither you were a promoter of the company holding associate subsidiary. Okay, in both the cases you are not an independent one. Now you have no material pecuniary relationship with CHAS. Okay, no material pecuniary relationship with CHAS during the last 3 financial years or current financial year. Okay, what is materially pecuniary relationship? That has not been defined in our syllabus as of yet, but it generally means that the substantial part of it, you are deriving something substantially from the company. Say a huge amount of raw material are being procured from your firm, right? So you have no material pecuniary relationship with the CHAS, that is company holding associate subsidiary, during what the last 3 are lucky number 3 financial year or the current financial year, except what this will be. Obviously you are independent director, you are not going to go free to the company. You're rendering services, you are going to get paid. So what this except means, this means that you can have your director remuneration. Apart from that, there should be no material pecuniary relationship. Now this is again a good summary I have made. What does SEBI LODR says? None of whose relatives. Now I am not talking about myself, I am talking about the people who are going to call me before my result and ask me what is the result, and if I pass they are going to go shying away, and if I fail they are going to tell me, oh, your preparation were not that good. So about whom I am talking about the relatives, right? So none of whose relatives. I am not talking about the director himself right now, I am talking about the relatives. So a situation, the duration and the value. So what this relative situation is, that is he is holding securities or interest in the CHAS, that is company holding associate subsidiary, for what duration? During the 3 immediately preceding financial year or current financial year. This is the duration. And what is the value? The face value of this securities or interest is greater than 50 lakh rupees or 2% of paid up share of CHAS. Now there is nothing given which is higher, which is lower here. That's why that's not our point of concern. But did you guys got that point, that if your relative, the one who is going to call you before your result, if he is holding some securities or interest in the CHAS and it was during the 3 immediately preceding financial years or in the current financial year, and the face value of that securities or interest is greater than rupees 50 lakhs or 2% of paid up share capital of the CHAS, you are debarred from being an independent director. You cannot be an independent director. I hope this point is very clear. There's nothing complicated in this. The second situation that we are into, your relative, the one who is going to call you before your result, is indebted to the CHAS or its promoter or directors. That is, he has taken certain loans from them during what? Lucky number 3 immediately preceding financial year or current financial year. Now there's no value prescribed. There's no value access prescribed by the LODR. But then there is certain point we are going to deal with it, that yes, this is prescribed but not directly here. Now what your relative has done, he has given some guarantee, provided some security for indebtedness of any third person. So his friend has taken certain loan from your company and he has given a guarantee. What during the duration is during the 3 immediately preceding financial year or current financial year, and again the value is not here. So, and he is having any other pecuniary relationship with the CHAS, and then it is defined, there is no duration. So has, right, the word is has. So if he has no pecuniary relationship currently going, it's okay. But if he has, and the value is 2% or more of its gross turnover or total income, of whom? Of the company, right? Then you are not an independent director, and LODR has also stated that all these transactions or relationships that we have stated above, that is, first is securities holding, second is loan taking or borrowing, third is giving guarantee for some other loan, and fourth is any other relationship. So for any of these transactions, or if you accumulate, if you summarize all of them, they should not exceed 2% of gross turnover of the company holding associate subsidiary, 2% of total income of the company holding associate subsidiary, rupees 50 lakh amount or amount as may prescribed, whichever is lower. So basically for these two things, whenever it is prescribed as may be prescribed has been written here, if the guarantee, the value of guarantee or the value of loan is greater than any of this, that is not exceeded, right? So it can be equal to, but it cannot exceed. So if it is exceeding any one of this, whichever is lower wala, so in that case your independency is gone. I hope this was not that technical part, might be somehow boring, but please bear with me, we are going to finish this very soon. Now I'm talking about himself and his relatives both, okay? So the one who are going to call you one day before your result, I'm talking about them also, and I'm talking about you also, you, the one who is going to be a chartered accountant in this CA final results. So for both of you, there are certain situations, there are certain duration, and there is certain value or exceptions to which if you fulfill them, you are not an independent director anymore. What you hold, you have held the position of KMP or employee of the CHAS, that is company holding associate subsidiary or company belonging to the promoter group. So if you or your relative held KMP employee of CHAS in any of the three immediately preceding financial years, obviously in current financial year, if you are KMP or employee, you are anyways not going to get appointed as independent director. But in the last immediately three preceding financial year, if you were a KMP or employee of the CHAS, then bro, get out. You cannot be an independent director. But relative, he's doing some job in Reliance, man. You cannot tell him, I want to be an independent director, please resign. He will not resign. So for relative, SEBI LODR says that if relative is employee, not KMP, not KMP, only employee, then it is okay. It won't affect your independence. Let it be. Now, what is happening that, auditors, company secretaries and cost auditors, these are three people who are constantly engaged with the company throughout the year. So if you or your relative is an employee, is a proprietor or a partner of firm of auditors, that is chartered accountants, or company secretaries in practice, or cost auditors of the CHAS, that is company holding associate subsidiary, in any of the three immediately preceding financial, even if for ₹1, no matter if you are employee, proprietor, partner, bro, you cannot be independent, get out. And for legal or consulting firms, obviously when you lawyer or consulting firms are engaged for a specific period of time for a specific project, so in any of the three immediately preceding financial years, if you are associated with the legal or consulting firm, and those legal or consulting firm having transaction with company holding associate subsidiary of greater than equal to 10% of gross turnover of the firm, of this firm, then bro, get out. You cannot be an independent director. So anyways guys, clear, this is clear, okay? Now if you or your relative holds voting power of the company that is greater than equal to 2% of total voting power, you need to get out. If you or your relative is a chief executive director of a not-for-profit organization, okay, a NPO, someone is working for some good object outside the company or in India, and it is receiving more than or greater to 25% of its total donations or total receipts from CHAS or its promoters or directors, okay, more than 25% of what? Of its total receipts. Whose total receipts? This NPO's total receipts, okay, or this NPO is holding what? 2% or more than 2% of total voting power of the company, okay. Here it is not CHAS, only company. In that case, bro, get out. You cannot be an independent director. Then if you are a material supplier, service provider, customer, lessor, lessee of the company, or your relative is one of those, bro, get out. Then next this is the last point, and this is a very interesting point. What basically we are doing, there are two friends, both of them wants to be independent directors but still want to control the company in malified way. What they will do, there is company A and there is V, another is V, that is a listed company. What I will do, I am an independent director in listed company, right? But I still want to control this in a indirect way. What I will do, I will become a dependent director in company A, which is of my friends, Okay, my friend has incorporated this. Now what I will tell him, brother, I am acting here as a non-independent director. Basically, I will control this company A. You become independent director of this company and non-independent director of that company. Are you getting what is happening? Basically, who is not a non-independent director of another company on the board of directors of which any non-independent director of listed entity is an independent director. So company A, on the board of directors of company A, somebody is an independent director, and that independent director is acting as a dependent director or say non-independent director in my company. Okay, so some person is a independent director in X company or A company, and in my company he is acting as a non-independent director, and I am an independent director in this company, that is my company. I am an independent director, and there in his company A, I am acting as a non-independent director. Basically, we have just switched our roles and we are indirectly controlling the businesses in malified way. So even in this case, you are not qualified to be, you need to get out, basically get out. Now comes remuneration of directors. This is a very important part. Everybody wants to know what is my remuneration. Without that, I am not going to work anyways. So what is remuneration of directors? There is no fees as such prescribed. It is given that the board of directors will recommend the remuneration, that is the fees and compensation of whom firstly the non-executive directors and the independent directors. And what this recommendation will do, it will require the approval of the shareholders in general meeting. Okay, so board of directors will recommend the fees and compensation of non-executive directors and of independent directors, and shareholders will approve them in general meeting. Now there are certain special points. For example, the fees and sitting fees or the compensation that has been recommended by the board, this is below the limit prescribed by the Companies Act 2013. So for example, Companies Act has prescribed say 100 crore as a maximum fees to be paid, and board is recommending only 90 crore. In that case, you need need to have an approval of shareholders for non-executive directors or independent directors ka remuneration. So the first special point is for the fees. If the sitting fees to non-executive directors are within the limit prescribed under Companies Act without approval of central government, right? So in Companies Act 100 crore is prescribed, and this 100 crore is without the approval of the central government. Then in that case, there is no requirement for shareholders approval. First special point. Second special point, approval shall mention limits for maximum number of stock options that may be granted to non-executive directors. It is shall mention, right? So your approval, when you're approving your approval of the shareholders, whatever the approval is going to be, it has to mention the number of stock options that may be granted. Okay, they are not granted, but the maximum number that may be granted to the non-executive directors. Because what will happen if after their appointment, if they get a lot of stock options, it might get a part that they get favored towards the company, right? Now the third special point is that if the annual remuneration payable to a single non-executive director exceeds 50% of total annual remuneration payable to all non-executive directors, then approval will be by way of special resolution. Sir, this was something above head. What was this? Such a big statement. Basically, it is not. See, there is one non-executive director, and you are paying him rupees X. Okay, and the total remuneration you are paying to all the non-executive directors is rupees Y. Total remuneration that you are paying to all the non-executive directors, including this one, is rupees Y. So if this X, that is the remuneration to this one non-executive director, is exceeding 50% of this Y, then the approval that you are taking from shareholders will be by way of special resolution and not normal ordinary resolution. Now for independent directors, there will be no stock options. Wow, new point discovered, Einstein. Everybody knows this, that we cannot grant stock options to independent directors, else they will not be independent anymore. Now what is happening is, see, when executive directors, the one who are working in the management very actively, are promoters or belong to the promoters group, okay, then their remuneration will be passed by way of a special resolution. Okay, so when executive directors, they are promoters or they belong to the promoters group, then their remuneration will be passed by way of a special resolution. And there are certain special point. Again a chart. How many charts, sir? Why so many charts? Necessary. So, and if there's one executive director, one executive director and the annual remuneration payable to him exceeds rupees 5 crore or 2.5% of net profits of the listed company, whichever is higher. 5 crore or 2.5% of net profits of the listed company, whichever is higher. Whatever the X amount comes here, if the annual remuneration payable to this one executive director exceeds it, then you need to have a special resolution passed, right? Then you need to have a special resolution passed. Or for example, you have not just one, you have more than one executive directors. In that case, this 2.5 will turn to 5%. So the annual aggregate remuneration payable to all of them exceeds 5% of net profits of the listed company. In that case, you need to have a special resolution passed. Okay guys, very simple. Everybody got it? When the executive directors are promoters or member of promoter groups, and when these two conditions, any one of this is fulfilled, you need to have the resolution passed will be special resolution and not ordinary resolution. Now, what disclosures the company needs to make in its annual report? Obviously, all pecuniary relationship transactions of listed entity with non-executive directors and all these other things. We don't need to do. We don't need to go into detail. You can just read it once because we believe in a strategy that we don't leave anything. But this is not important. This is a very general points that have been mentioned here. Now we have talked about how much money to be given to them. Now what they will give to us? Okay, obligation of whom? Obligation of directors and senior management. Obligation of whom? Directors and senior management. Now basically, what is senior management? Old people. Senior management are old people. Basically, senior management are the officers or personnel of listed company who are members of its core management team. That is the team who is actually managing the company in its very depth. So these are the people who are the members of its core management team, and it does not include board of directors. That's why I have cut this part. Okay, so senior management is what? The officers or personnel who are a part of the core management team and not a part of the board of directors. Okay, so basically they comprises of members of management one level below the CEO, MD, WTD, or in a more easy way like this. See, this is the top management hierarchy. The board of directors, that is the chief executive, MD, hold WTD, manager. Below them comes the senior management. Okay, people one level below from above. Okay, below them this comes, that is they are not part of the board of directors but they are below them, and it mandatorily includes a company secretary and the chief financial officer. So senior management mandatorily includes CS and CFO plus people who are one level below from above, that is from the top management. And then comes the other hierarchy, departmental heads and all those. So basically for listed company, these are the senior management. Now, there are certain rules for the board of directors. The board should meet. I told you we are paying them now. We will expect something from them. So what we will expect? They should meet at least 4 times a year. As same as audit committee, they were also meeting 4 times a year. Again, same, the duration between 2 meetings shall not be greater than equal to 120 days. So if they are meeting on 1st of any X way, 1st plus 119. So whatever this Y will come, this should be your last date before which you should meet. Now what will be your quorum? So you will ask me, sir, I am a normal listed company. I don't belong to any top 1000, top 2000. In that case, as per the Companies Act 2013, whatever we have discussed or whatever you have discussed in your CA inter level, that is your quorum. But if you are top 2000 listed company, that is what the subject matter of SEBI LODR is. That is what is the subject matter of SEBI LODR today is. In that case, quorum is 1/3 of the total strength or 3 directors, whichever is higher. Again, our magical number 3. So what is the quorum of board of directors? 1/3 of total strength or 3 directors, whichever is higher. And even if you participate by video conferencing or any other AV means, it will be considered for the purpose of quorum. Now, board shall periodically review compliance report pertaining to laws applicable to listed company. Okay. We as auditor are going to also check that SA 240, I guess, regarding the laws and right, consideration of laws during audit. That was the standard on auditing. Same way, board has to periodically review the compliance report relating to the various laws applicable to the listed company. They need to check it. Recently, we saw the RBI had a great struck down on apps like Lazy Pay, because they were not able to fulfill the regulatory requirements. Firstly, it was not fit in RBI's regulation. Secondly, they had no guarantee as such from the market, right? The money they were lending, right? So that's why it was a great struck down on it. So board has to periodically review the compliance report. Second thing, board shall satisfy itself that plans are in place for orderly succession for appointment to the board and senior management, right? So what board should do? Board shall satisfy itself that plans are in place for orderly succession. By one day you are going to go, one day you are going to get exit, so you need to have a, you need to check now whenever you will go, there would be a proper and orderly succession of yours, right? So this should also be checked. Now regulation 17A, maximum and alternate directorship. What does this mean? See, for a normal director, you cannot be a director in more than 7 listed companies. If you are a normal director, you cannot be a director in more than 7 listed companies. That is max 7 companies, listed companies, you can be a director. Okay. In private limited, in other public limited, you can be whatever the limit is prescribed in Companies Act. But for listed, it can be maximum 7 listed companies. Say you are not a normal, you are an independent director. In that case, you cannot be an independent director in more than 7 listed companies. Okay. So for a normal director, maximum 7 listed companies. For an independent director, maximum 7 listed companies, you can be an independent director. For a whole-time director or a managing director, what is the condition? It is basically, you cannot be an independent director in more than 3 listed companies. Are you getting what I'm talking about? First I was talking about normal director. Here independent director. Here you are a whole-time director or a managing director, and now I am telling you that you cannot be an independent director in more than 3 listed companies if you are a whole-time director or a managing director in a listed company. So these 3 points, everybody got it? Easy way. Summarized. I have summarized this, made up charts. Next regulation about independent directors, regulation 25. Independent directors shall hold at least 1 meeting in a financial year. Okay, how will they meet? They will meet very secretly. What does secretly means? That is without the presence of any non-independent director and without the presence of members of management. So independent directors will meet at least 1 in a financial year secretly. Now he will be liable for only those acts which had occurred with his or her knowledge. Everybody knows this. What if an independent director dies or resigns? In that case, the vacancy should be filled within 3 months of the date of vacancy. Again, our lucky number, within 3 months of the date of vacancy. For example, what happens? A company has to maintain an X number of independent directors in its board. What happens? Somebody dies, that is X minus 1, but they are still fulfilling the criteria prescribed by LODR, that is 1/3 or 2/3, whatever it may be, 1/3 or half, whatever, both of them. In that case then there is no need to fulfill the vacancy immediately or within 3 months if you are fulfilling the LODR criteria. Now comes the next regulation, the membership or chairpersonship of committees. Now comes the next part. A director shall not be a member in more than how many? 10 committees, and a chairperson in more than 5 listed companies. See, 2 different words I have used here. A member in more than 10 committees across all companies, and 5 listed only, and in 5 chairperson in not more than 5 listed companies. Okay, so for chairperson the criteria will be seen as 5 listed companies, and for a member it will be seen as 10 normal, that is all companies. What is all companies? It includes all public companies whether listed or not, and it excludes all private limited, all section 8, all foreign companies, all high value debt listed entities. So these all will be excluded. Only this is included, that is all public companies whether listed or not, for you be a member. So member के लिए 10 is the criteria, for chairperson के लिए 5 is the criteria. This 10 belongs to all public companies whether listed or not listed. This belongs to only listed companies. Okay guys, clear? No issues? I hope everything is going fine. And now, if I've slept, congratulations, please wake up. We are going to end this chapter very soon. Now there comes the committees. This is the very important part, how to remember these committees. So see, when I was talking about this, that is here, that director shall not be a member or chairperson in this 10 committees, 5 listed committees of 5 5 committees ka chairperson. So what these committees mean? These mean only audit committee and stakeholders relationship committee. This did not mean any nomination remuneration committee. This did not mean stakeholders relationship committee. This did not mean risk management committee. No, only audit committee, only stakeholders relationship committee. So when I'm checking this 10 number, if he is a member of say 20, he's a member in 20 risk management committees across various companies, he is not violating anything. But instead of this RMC, if it would have been audit committee, then he was violating. Guys, got it? Next part, there is certain other part, there are certain other points. See, this one is important. If a key manager person, if a director, if a promoter, he wants to enter into any agreement for himself, okay, with regard to compensation or profit sharing with respect to dealing in company securities, what? You are going to deal in company shares and you are going into an agreement with somebody for sharing compensation, for profit sharing. Then what to do? Okay, take an ordinary resolution, take some approval from the shareholders, and in that case you can go. Okay, so there's nothing much of don't get confused regarding this. Now we are dealing with something called as code of conduct. What is code of conduct? This is basically decorum. These are basically the rules that a board of directors should follow. If they don't follow, they are not following the ethics, they are not following the spirit of the company. So who will frame this code of conduct? Board of directors will lay down the code of conduct. Who will follow them? The members of the board, the senior management, everybody will follow them. What it will have? It will have the duties of the independent directors. Okay, apart from how you have to behave, it will also include the duties of the independent directors. And yearly every member of the board of directors and senior management shall give a certificate. Okay, and they should affirm on it, they should sign that okay, we have followed the code of conduct. So all members of the board of directors and senior management shall affirm compliance with the code of conduct once a year. Okay, so every year, so once you clear your exams, or if you have been into articleship with the big fours, you would have experienced that they take a yearly compliance from you. Okay, wherein you have to answer various MCQs which will then deal with this also. Okay, sorry, that whatever certification they take from you, that is basically relating to your independence. But this is what that is how the practice is like. Yearly the compliance or yearly the affirmation are taken. Now listed company shall disseminate the code on its website. Obviously they should show to the world that okay, this is our code of conduct. And if somebody is feeling that they are not being followed in letter and spirit by the directors, then he can obviously use Vigil Mechanism, the employee or the director. And the annual report, the report that the auditor is going to sign, should contain a declaration signed by the chief executive officer of the company that all have affirmed compliance with the code. Who all? The members of the board of directors and the independent directors, everybody. Now Vigil Mechanism. This is a very important part. We have read about it. We have learned about it before also. Vigil Mechanism. That Vigil Mechanism was a part and parcel of Companies Act. This Vigil Mechanism is a part of LODR. So listed company shall formulate a vigil mechanism for whom? Obviously for the one who always cries, that is the employees and directors. What they will do? They will obviously, they can complain fearlessly, and there should be adequate safeguards against their victimization. And obviously this should also go on website. Company wants to get famous, company will show their code of conduct on website, their vigil mechanism on website. And corporate governance section of the audit report shall contain the details of the vigil mechanism. Now comes the nomination and remuneration committee. What is the nomination and remuneration committee? How many words? Nomination and remuneration committee, 3 words. So it will be having at least 3 directors, right? What these people are going to do, what the nomination and remuneration committee will do? Firstly, they will be constituted by the board of directors. What is their work? As from the name it suggests, they will recruit people. If they are recruiting people, brother, they should not be involved in day-to-day management of the company. So who should they be? They should be basically non-executive directors. So all directors, all these three or more directors should be non-executive directors, and at least 2/3 of them should be independent. Right, 2/3 of them should be independent, because then they will recruit some interested people in important positions. That should not happen. So 2/3 of the directors should be independent, and obviously the owner, that is the chairperson of them, should also be an independent director. Now, the chairman of the company, whether he is executive or non-executive, I'm talking about the chairman of the company, okay? The chairman of the company, whether he is executive or a non-executive director, he can be a member of the nomination and remuneration committee, but he cannot be a chairperson, right? That's why I have cut it down. I have put a cross here that the chairman of the company, Mr. Tata, whether he is an executive or non-executive director, he can be a member of this committee, but he cannot chair this committee. What will be the quorum of this? Obviously, you have minimum 3 directors, so majority becomes 2. So your quorum will be either 2 members or 1/3 of the members, whichever is higher, plus at least 1 independent director should be present. Okay, so 2 or 1/3 of the members, whichever is higher, plus at least 1 independent director should be present. Remember, the chairperson, even if he is not doing any work, he has to be present at the AGM to answer what? The queries of whom? The parents of the articles, who are frustrated because of the principal's 12 and 13 hours of working culture. And they should meet at least once a year. Obviously, if they don't meet, how they are going to discuss the important issues? So they are going to meet at least once a year. What their role is? Their role is obviously formulate criteria for qualification, the independence of directors, their remuneration, and whether to extend or continue the term of an independent director or not. So this is basically the role. This is not a part and parcel of our syllabus. What we are going to deal with is only its composition and how frequently they are going to meet. Next comes the Stakeholders Relationship Committee. What is Stakeholders Relationship Committee? Again, 1, 2, 3. 3 words. 3 words. So 3 members are going to be there. 3 members are going to be there. So composition will include 3 directors. Okay. Now, Stakeholder Relationship Committee, whom they are going to hear to? Stakeholders. They are going to listen to whom? Shareholders. Do anybody listens to shareholders? Hopefully nobody. So listed companies shall have a Stakeholders Relationship Committee, and they need to look into various aspects of interest of shareholders, debenture holders, and other security holders. Since this committee is having a important function, but this does not require such a level of non-executiveness. That is, they can be involved in day-to-day work of the company, and even doing that, they can listen to the stakeholders, right? So in that case, only the chairperson needs to be a non-executive director. The members need not be non-executive directors, and that's fine. Now, composition should be 3 directors, 3 words, 3 are lucky number. Plus, if company has outstanding superior rights equity shares, 2/3 shall be independent directors. And for other companies who don't have something like this, at least 1 independent director. Now you will ask me, sir, why this criteria has come here? Because this committee is related to what? This committee is related to shareholders, right? So this criteria related to shareholders is also here. That's how you're going to memorize it. They will also meet at least once a year. After that, it's all going to enjoy. So once a year they are going to meet, and the chairperson will be present at the AGM for answering the queries of the parents of the articles. And what their role is, obviously resolving grievances of the security holders, transmission of shares का complaints, non-receipt of annual reports का complaints, dividend नहीं मिला, the members have not got dividend, the shareholders have not got dividends, ऐसे complaints they will handle. Now these 3 are also their roles, but it's not going to be our part. It's not going to be a part where the question will be formed. Now the Risk Management Committee, again 1, 2, 3 words, so 3 members. Okay, this is applicable only to top 1000 listed companies. Remember this is a star point. The Risk Management Committee is applicable only to top 1000 listed companies. The board of directors will constitute this. The risk management, what they will do? Basically, they will manage the risk of the company. 3 members. What these 3 members will be there? Okay, so the 3 members. Okay, so the constitution will be of 3 members, and the majority will be from the board of directors. Why majority from the board of directors, you will ask me? Because they are basically managing the risk of the business. And who is managing the business? Board of directors managing the business. So they have a more idea. They have a more greater and in-depth idea of the business. That's why the Risk Management Committee will have majority members from the board of directors. So if you have SR equity outstanding, 2/3 should be independent. If you are other listed company, at least 1 should be independent. Chairman, he can be a member of the board of director. That is basically, I am telling that a member of the board of director can be a chairperson here, and senior executives of the company can be members of this Committee. They will meet at least twice a year. There's a chain here. Okay, everywhere we were seeing at least once. Here it is twice a year. So they will meet at least twice a year. The quorum should be how much? The quorum should be how much? 3 members. Majority is 2. So 2 members or 1/3 of the members, whichever is higher, plus at least one member of board of directors. Otherwise, we used to see here one independent director, but now here what we have seen. Have we seen something related to independent here? No, not much about independent directors here. So that's why at least one member of board of directors should be present, right? They should meet as much time as they want to, but the 2 meetings that they are going to have, that is one here and one here, the time gap between these should not be more than of 180 days. Elsewhere it was always 120 days. Here only there is a shift, that is 180 days. Now what they will do, obviously they will formulate a detailed risk management policy which will identify the internal and external risk. They will create or they will formulate the measures for risk mitigation. They will formulate the business, they will evaluate the business continuity plans, and more or less more are there. This one is important. They should periodically review the risk management policy at least once in 2 years. This is very relevant for your MCQ. That is, at least once in 2 years they should review their risk management policy. Guys, you might be feeling boring, but trust me, each and every part of the ICI model has been considered here. That's why it's getting a little long. Related party transactions. Now we are talking about the related party transactions. Bas ho gaya. We are coming to an end. Related party transactions. See, listed entity has to formulate policy on materiality of related party transactions. Basically, it means the transactions whose value is greater than 1000 crores or whose value is greater than 10% of the annual consolidated turnover of the listed company, whichever is lower. 1000 crore or 10% of annual consolidated turnover of listed company, whichever is lower. If the value of this transaction is more than this, exceeding, it is not equal to. Okay, it is not equal to, it is exceeding. In that case, that transaction becomes material related party transaction. This is given in ICI model. This is not something I have picked up. Then the board of directors should have a policy to include clear threshold limits. Right, clear threshold limits. Say they want this materiality to be rupees just 100 crores. In that case, it should be clearly mentioned. Then the policy relating to the related party transaction should be reviewed at least once in every 3 years. Okay, for MCQ very important, at least once in every 3 years. And all the related party transactions should require prior approval of whom? Audit committee. Guys, done? Okay, and remember, in audit committee also only members who are independent can give approval. Okay, so those members who are not independent directors cannot give approval even if they form part of audit committee. Now the next part, management of subsidiary companies. Again, a very great way I have classified them. What is a material subsidiary? The subsidiary whose income or net worth exceeds, that is greater than, not equal to, greater than 20% of the consolidated income or net worth of listed company plus its subsidiaries in the preceding accounting year, it becomes a material subsidiary. A special point of reference, at least one independent director of the listed company shall be director on the board of the unlisted company, whether incorporated in India or not. So when you have a material subsidiary, the board of director of that material subsidiary should have a director who is acting as an independent director with the listed company. Okay, clear? Now we are going to the classification. So if there's any transaction related to the material subsidiary, what effect will it, if the transaction will have, and what the listed company should do. This is basically the management of the material subsidiary. So the first transaction is, if the listed company is selling the shares of the material subsidiary, and it is having an effect that the shareholding of the listed company is getting reduced by 50%, for example, that is, it is getting reduced to 50% or less than 50%. Currently you are holding 51%. Now it is going to 50% or 49% because of this transaction. This is having the effect. Or you are ceasing to exercise control over the subsidiary, that is, you are even going below 20%, that is say 19%. Then what the listed company should do? It should pass a special resolution before selling. Who will pass this special resolution? Listed company is going to pass, brother. Listed company is going to pass a special resolution that we want to sell the shares of the material subsidiary, and the net effect of this sale is that our exercising control will go away, or our shareholding percentage will be either 50% or less than 50%. And in case if it is the insolvency in bankruptcy approved resolution, then there is no need. Okay, so if it is a IBC case, we have to sell that. There is no approval required. For example, if the listed company is now selling, disposing or leasing of assets of the material subsidiary, the effect is that this sale is basically 20% of the assets of the material subsidiary. So the asset side consists of 100 crores of the material subsidiary, and we are selling, disposing, leasing of at least 20% or say 21% of this 100 crore. We need to pass a special resolution. But again, if it's a IBC approved resolution, we don't need to pass a special resolution. Getting guys, easy way, easily classified. Next come aspects related to unlisted subsidiary. Now I was talking about material subsidiary. What was material subsidiary? Whose income or net worth is exceeding 20% of the consolidated income. But unlisted subsidiary means I have a subsidiary and it is unlisted. It may be material, it may not be material. In that case, the financial statement of this unlisted subsidiary and investments made by it shall be reviewed by the audit committee of the listed committee. Okay, so if my unlisted subsidiary is having some investments, is doing some investment, or their financial statements are being prepared, the audit committee of the listed company, my audit committee will review it. Minutes of the meetings of the board of the unlisted committee shall be placed at the meeting of the board of directors of the listed company. And again, significant transactions or arrangements that are entered by the unlisted subsidiary shall be brought to the notice of the management of the listed company. Now you will say, sir, what is significant transaction? It is basically transaction that exceeds 10% of the total revenue, expense, asset, liabilities of unlisted subsidiary. So if this is a balance sheet, this is liabilities, this is asset, this is P&L, okay, income, expense, anything. If a transaction is exceeding 10% of asset, 10% of liabilities, 10% of income, 10% of expense, any part of expense, any particular expense, consolidated expense, whatever it may be, if it is doing that, and whose balance sheet, whose P&L, the unlisted subsidiaries, in that case it becomes a significant transaction, and it should be brought to the notice of the managers or the management of the board of the listed entity. Next is the secretarial audit. Who should do secretarial audit? Obviously only the rich can afford it. So the listed company, it's a rich company, and a material unlisted subsidiaries, okay, incorporated in India. So if it's incorporated outside India, no secretarial audit is required, but incorporated in India, need to have a secretarial audit. Report will be given by a company secretary in practice. It should be annexed with the annual report. Always remember, this is your MCQ. Within 60 days from the end of each financial year, the listed entity should submit the secretarial compliance report to the stock exchange. Now there are certain disclosures. Always remember, this is again a not so important part. Still I am telling you, more or less not even these two. This is a very important part. There is no question as of yet came from this part. That is the sexual harassment of women at workplace, the Prevention, Prohibition and Redressal Act 2013. No question till date. High probability and easy answer. Only 3 points. First point, the number of complaints filed during the financial year, the number of complaints disposed of during the financial year, the number of complaints pending as on the end of the financial year. Only these 3 things should be checked by the auditor. Okay, this is what not auditor, I would say. Only these 3 things are to be disclosed. Disclosed by whom? Board of Director. In what? Audit report. Got? Report on corporate governance. Now what is this here? What is this report on corporate governance? Listed company should submit a quarterly compliance report to the stock exchange within 21 days from the end of each quarter. And what this compliance report will have, whatever we have read till now, everything that is applicable to the company, whether it is complying with it, not complying with it, why, what are the reasons for not compliance, whatever this will be in this compliance report, and this will be submitted to the stock exchange quarterly within 21 days from the end of the each quarter. Okay, who will sign this? the compliance officer appointed by the board of directors or the chief executive officer, any one of them will sign this. What auditor should check? Auditor should check that the board of directors have included a separate section on corporate governance. In what? In the annual report. Okay, and all basic thing, the financial statement data and the data as per the corporate governance should not be inconsistent with each other. Next come the minimum information to be placed before the board of directors. Why this has to be there? This is important. This is important because these are the ultimate decision makers. Okay, even if shareholders are going to give assent and we consider them as the ultimate people, but these are the people who are going to formulate policies, plans, project the future. So yeah, there are certain points we don't need to go into any detail of it. Just from above or just once read it. That is the quarterly results for the listed company. Show cause, demand, prosecution notices, if any fatal or serious accidents have occurred, any joint venture that we have entered into, any significant labor problems, quarterly details of foreign exchange exposures if we have any, non-compliance of any regulatory, statutory or listing requirements. Else point you can read, there are very easy, don't go into learning them. Okay, now comes the next important part. The next important part, CEO CFO certification. What is this CEO CFO certification? Okay, LODR states that the CEO or the CFO of the company or any other person who is heading the finance function shall certify to the board of directors that what they will tell, that this CEO, this CFO or the finance function head has reviewed the financial statement, the cash flow statement of the year, and to the best of their knowledge, these statements do not contain any materially untrue statement. They do not mislead. They do not contain any misleading facts. They present a true and fair view of the company's affairs. Second thing they are going to certify is there are no transactions which are fraudulent, illegal, right, or violative of the company's code of conduct. Also, they accept the responsibility for establishing and maintaining the internal controls. And if they feel that their internal controls had certain issues, deficiencies, then they have indicated to the auditors or to the audit committee changes in internal control, changes in accounting policies, and significant fraud instances. Okay, now coming to the very last part, content of the management discussion and analysis. Okay, what this should include? See, this chapter will have direct questions. Okay, this chapter is going to have direct questions. So there will be direct keywords, that is content of management discussion and analysis. So you don't need to go into find that okay from which aspect this question is that. There will be direct questions. This is I have copied this from ICI with due respect to its module. I have copied it from there. Okay, industry structure and development, risk and concerns, internal control, segment wise performance, opportunities and threats, outlook, and again this all. There are certain ratios, data turnover, inventory turnover, interest coverage. So you need to have a look over all this. You don't have to learn this, you need to have a look over this. Now see, company has to obtain a certificate from either the chartered accountants, that is auditors, or practicing company secretaries regarding compliance of conditions of corporate governance as stipulated in these regulations, and annex the certificate with the director's report, which is sent annually to all the shareholders. Okay, and it will be also be sent to the stock exchange. What basically we are taking, CEO CFO certification is an internal certification we are taking, right? We are now taking an external certification from whom the auditors or the company secretaries, that the company has complied with the corporate governance regulations as stipulated. There are certain focus points now. Statement of deviation. What is this? See, if you are not able to follow a certain regulation, certain rule as we have studied before, then there has to be a statement of deviation prepared by you. This will be prepared on a quarterly basis and it will be submitted to the stock exchange. The first issue, the first deviation that you have taken is what? That is, you have used the proceeds of some IPO or FPO for some another way. Okay, that is not allowed as per SEBI LODR, but you have used that, you have done it. So it's a deviation. So in the statement of deviation, you have to mention it and you have to issue this. You have to make this quarterly and submit it to the stock exchange. Now you also have to make a category wise variation. That is, for example, you have raised some X money through IPO for capital expenditure, but you have used that money on say sales and marketing for an Y product. So you need to have a category wise variation. Say you raise the money for capex, but you spent it on sales and marketing, working capital, or whatever. You raised it for working capital and spent it on some other way. So between projected utilization of funds and actual utilization of funds, whatever the deviation is, you need to give a category wise details. Limited review of audit of entities to be consolidated. Now what is happening? The statutory auditor is going to audit only the listed entity. So for the subsidiaries that are going to get consolidated into you, some other auditor will be appointed for them. But then what SEBI LODR state, as a statutory auditor, what you do, you just take a limited review of the entities, okay, whose financial statement are going to get consolidated with the main listed entity. So that's a extra work that the statutory auditor of a listed company has to do. He has to undertake a limited review, not complete audit, just a limited review. Now, delegation of power to transfer the securities. This we have already dealt with in our senior KG level, that is CA intern. The board of directors shall delegate the power of transfer of securities to a committee or the compliance officer, and the board of director or the delegated authority shall attend to the formalities for attaining the transfer of securities at least once in a fortnight. This is a MCQ question, that the board of director or the delegated authority, whether it be the registrar to an issue or the share transfer agents, they shall attend to the formalities for attaining the transfer of securities at least in how much period? At least once in a fortnight. That is a 14 days period. So at least once in a 14 days period, you have to look into the matters related to the transfer of securities. Now, there are certain provisions relating to the resignation of statutory auditors. This is a SEBI circular dated 18th of October 2019. So what is happening? The statutory auditor is resigning. This is going to create a chaos, right? And again, the audit work will be pending because he is going midway. He is not an employee that he will serve the notice period and go away, okay? He has certain responsibilities on his shoulders. So what are the regulatory provisions? Firstly, if the statutory auditor is resigning, then the listed company has to make timely disclosure of the resignation of statutory auditors to the investors. They should call the investors, okay, sir, the statutory auditor has resigned. Then audit committee is responsible for appointment of the statutory auditors, right? So they will check out that who is going to be the next auditor. Third thing, in case of resignation of auditor, they have to give a detailed reasons why they are resigning to the listed entities, and these listed entities will in turn tell this reason to the stock exchanges within 24 hours of receipt of this reason. Okay, so auditor has resigned on 1st of Jan and told his reason on 5th of Jan. Okay, so within 24 hours from 5th of Jan, that is when the listed company received the reasons for their resignation, they will intimate them to the stock exchanges. Now what happens? Auditor is resigning within 45 days from the end of a quarter. Okay, so for April, May, June, this is the first quarter. He is resigning somewhere from 45 days after 45 days from June, roughly 15. So roughly 15 July. Okay, so if he is resigning after 15 July, he need to issue the limited review or audit report for this quarter only. Okay, so you have taken substantial amount of time, complete quarter you have worked. After that also you have worked for complete 45 days. So you need to issue for at least this quarter a limited review or an audit report. What comes next? For example, he has resigned 45 days from the end of a quarter. Then auditor shall, before such resignation, issue the limited review or audit report for such quarter as well as the next quarter. Okay, sorry, I got a mistake here while explaining you. He has resigned before 15th of July. Okay, he has not taken sufficient amount of time. He has resigned within 45 days from the end of the second quarter. So roughly 15 July. Or not even 15 July, if we consider this, that from the end of the quarter, if we consider it as 13th June, 45 days from here comes July, and then July, August. So roughly 14th of August. Sorry, I got a mistake. I explained it wrongly. So if the auditor has resigned within 45 days, that is within 14th of August for the first quarter, he need to issue the audit report or limited review for only the first quarter. For example, he goes beyond this date, that is beyond 14th of August, that is beyond 45 days period. He takes more than 45 days after the end of the quarter to resign. Then in that case, you have taken more than sufficient time. You have to give limited review or the audit report for the first quarter as well as the next quarter also. Now, if you have continued as an auditor for three complete quarters, then you cannot go just like after giving the audit report for the 3 quarters. No, you have to give the audit report or limited review for the fourth quarter also, as well as the audit report for the financial year as well. So these are the conditions to be complied by the auditor. Always remember, upon resignation of the auditor, audit committee shall deliberate upon all the concern raised by the auditor. The auditor is saying that the management was not giving us information and we are not able to access the inventory and all those concerns. Audit committee will deliberate upon it. As soon as the audit committee deliberates, they will tell their views to the management and they will also tell their views to the stock exchange within 24 hours after the date of the audit committee meeting. So timelines are gone, and that's it guys. We have successfully completed this audit committee and corporate. This might have been a certainly long video, but it was a quick as well as in-depth coverage. We have covered each and every corner of the ICI module. Hope you guys have liked it. If it is really helpful to you, please do share it with all your friends who are in need of it. Thank you. Goodbye. Have a nice day and all the best for your exams.